Good morning, everyone. I'm going to go ahead and get started here. Welcome to DWD's monthly webinar for nonprofits. My name is Phil McKenzie. I'm a director here with DWD and with DWD's nonprofit group. Also joining me today are Carrie Minnick, partner in charge of DWD's nonprofit group, and Tyson Moore, a supervisor in DWD's nonprofit group. And Tyson will be presenting our topic today, understanding the Form 990. Tyson's going to cover several topics on this important form and the various related schedules that come along with it, with a special emphasis on what board members should be looking for as they're reviewing their organization's Form 990. Before I hand it over to Tyson, I would like to mention a couple other things. Today's webinar is live and interactive, so if you do have questions throughout the presentation, please feel free to use the Q&A feature at the bottom of your screen. We will definitely try to answer those questions as we go through the webinar today. If we shouldn't get to them, then we'll try and definitely respond as soon as we can after the conclusion of the webinar. Also, the slides from today's presentation will be emailed out to all participants, and also will be made available on DWD's website underneath their nonprofit education page. So you can always look for them there. With that, I'll go ahead and hand it over to Tyson to start the webinar.
Thanks, Phil. Thanks for everybody that's attending the webinar today. We're going to talk about Form 990. Before we get started, I just want to go over a few general things to think about when it comes to Form 990. First of all, there are really 4 different versions of the form that can be filed. And the version that your organization needs to file really depends on your gross receipts and your assets. Just a reminder that there are some exceptions where certain types of nonprofit organizations do have to file the full 990. However, in general, if your gross receipts are less than $50,000, you can file the short form 990N. 990N is basically, it's just a postcard. It's 1 page, it requires very general information about your organization. If your gross receipts are more than $50,000 and less than $200,000, and your total assets are less than $500,000, you can file Form 990EZ. This is a little bit more involved than the 990N. It asks additional questions about your organization. It also will include some of your financial information. If you have gross receipts that are more than $200,000 or assets that are more than $500,000, you have to file the full 990. So this is the type of form that we're going to go over today. It asks information that's included in the 990EZ, but it also includes additional questions about your organization's structure and your governance. If you're a private foundation, you're going to need to file 990PF. That form looks a little bit different than the 990, but just know that if you're a private foundation, there is a separate form that you need to file, and you're not allowed to file a 990N or an EZ. So when is your 990 due? Well, it's due May 15th if your year end is December 31st, or November 15th for those with a June 30 year end. If for some reason you're not able to file by the deadline, maybe you're waiting on your audit to be completed, maybe you don't have the right information, you can file an extension. However, you need to make sure that that extension is filed by your original deadline. So that would be the May 15th or November 15th deadline. If you do end up filing late, so let's say you don't file by the deadline, you don't file an extension, there are penalties and late fees, as you can see on the screen here. So you want to make sure that you do file your return or extension by the deadline. Also, if your return is incomplete or incorrect, so suppose that you need to file the full 990, but you only file the 990N. Well, the IRS is going to take that as no return was filed. If you fail to file your return for 3 consecutive years in a row, you're going to lose your tax exempt status. And we really don't want that to happen. If that does happen, what you're going to have to do is go through the whole reapplication process again with the IRS. And if you've ever been through that, it's a very long, drawn out process. You have to refile Form 1023 or 1024, and you have to pay the related fees again for those forms. So we really want to make sure we're filing our 990s every year by the required due date. One thing that's a little different on a not-for-profit return versus a for-profit return is that Form 990 for not-for-profits, they're available for public inspection. So you and I, we can go on the internet, we can pull up a nonprofit's tax return. And it's actually a requirement by the IRS to make sure that your 990 for the last 3 years is available to the public. You can do this by having people email you, they can contact your office, you can provide them a paper copy or an electronic copy. You can put it on your website even. You can also, as I said before, go out on the internet to view 990s. And as you can see on the screen, there's several websites you can do that. And that's one reason why it's so important to make sure that your 990 is completed correctly and accurately, because it's a public document at the end of the day. When you're making your 990 open for public inspection by those outside of your organization, you just want to make sure that the names and addresses of contributors on Schedule B are not included. These are not open for public inspection. So when looking at Schedule B, we want to make sure that there's no names or addresses listed on the schedule. And if you're posting your 990 to your website, we're going to go over that in a little bit more detail later. One thing to think about as you're making your 990 available to the community, to funders, to those outside your organization, this could be the only communication that you have with these people during the year in some instances. So again, it's really important to make sure that your 990 is telling your organization's story accurately. So again, today we're going to go and look at Form 990, which is probably the version of the form that most organizations are going to file. It consists of 12 parts. All organizations have to complete the core form, and then there are some additional schedules depending on the type of organization that you are. So here are the first set of items that are included in the core form. It's in a summarized list. Somebody has to sign it. You have to talk about your program service accomplishments. And as you can see here, so far they haven't asked anything about your organization's financials. It's not really until we get further down where we start seeing items about your revenue, your expenses, your balance sheet. So unlike a for-profit return where you're reporting a bunch of numbers, you're calculating a tax at the end of the day, Form 990 is really an informational return, and it provides not only information about your finances, but about your organization as a whole. So as I said earlier, there's some schedules that need to be completed based on different activities of the organization. You can see here the first set of schedules that are available. And keep in mind, so not every not-for-profit is going to need to file every single one of these schedules. Most not-for-profits will have to file Schedule A, which talks about the public support test. Schedule B, again, that talks about your contributors and basically where you're going to get your money from. And Schedule D, which will provide additional information about your financial statements. Here's a list of the remaining schedules. Again, it really depends on the activities that you have. Do you have tax-exempt bonds? Do you have non-cash items? So if you have these different types of transactions, you may have to file different schedules. Another one on here is Schedule O. Most organizations are going to have to file that. And this is basically an opportunity to provide additional information about what is reported on the core form of the 990. We'll talk about Schedule a little bit more detail later. So let's take a look at the actual Form 990. And if you have your organization's Form 990 handy, you might want to follow along, take it out and walk through it with me today. We're going to talk about different areas. We'll start with the header, and this is the first page of your organization's 990. At the top, you see the periods that we're going to look at, because obviously when you're reviewing a 990 and you're looking at a 990, you want to make sure that you're understanding what period you're looking at. If your organization moves locations or if it changes locations, we need to make sure that we're reporting that to the IRS. We do that on this form by checking the box at the top left corner, and then we use our current address on the address line. Our new address will then get updated with the IRS based on that information. If we change our name and we want to make sure that's reported to the IRS as well, we do that by clicking the name change box. And if your organization has a website, we also need to make sure that's available. The IRS wants to know this because they say they're going to go out and look at your organization's website to see what information is available there. So for example, if you have a website and you're selling something on your website, is there any kind of unrelated business income there? they can look at your website and then compare to the 990 to make sure that they kind of agree. And I would say here, this is another good reason to make sure your website's up to date. Make sure your board listing, if you have one out there, is up to date. Make sure any programming information is up to date, because they do say that the IRS is going to look at your website. So moving down the page, on the first page here, the 990, this is basically just a summary page. So we start with the first line here, and I'm really not going to walk through step by step and line by line this entire form. I just want to point out different pages, some key areas that are really important that you want to make sure that we're answering correctly when we're completing this form. So line 1, this is really what the reader of the form is going to see first. We want to make sure that our mission is clearly defined, because really that's what lies at the core of a successful organization. And you should be judging the rest of the 990 based on this information. And as you can see, it says mission or most significant activities. So you can use your mission here, or you can write a short summary of your most significant activities. Either one is completely fine. When we're looking at the number of voting members of the governing board, this kind of tells us the size of the organization. And this should be the amount at the end of the fiscal year. So how many board members can vote? Because sometimes not all board members can vote. If you have ex officios, you have interns, if you have executive directors, they may be considered board members, but they don't all have voting rights. We want to make sure that we're recording the correct number here. Next is independent voting members. And these are the individuals that are not paid by the organization. So it's good to see not only how many voting members, but how many of those are independent from the organization. As far as the total number of individuals employed, this again helps to see how large or small an organization is. As far as how many employees that they have, when you're looking at this, though, you need to remember that not all organizations are going to have employees. Some will have contracted employees. Contracted employees, they will get a 1099, so they're not going to be listed here on this line. And also, some organizations rely heavily on volunteers, which goes into the next question. So maybe our organization A, maybe they have a large number of individuals that are actual employees. However, organization B doesn't have that many employees, but they may have volunteers to come in and do that work. So that's something to remember when you're looking at these numbers and analyzing a 990. I've seen several 990s where the number of volunteers is 0, or maybe it's just not answered at all. I think it's really important to make sure that you're reporting the proper number of volunteers. It really gives the reader an idea of how much support you're getting from the community. The more volunteers that you have, it shows that you're getting support. Also, you want to make sure that your board members are listed here. If you have board members that are not paid by the organization, they're going to be considered volunteers. So the number of volunteers should really equal the number of unpaid board members at a very minimum. The final section I want to talk about here on this page, it's the signature block, which is at the very bottom. It's important that the proper person is signing the 990 each year. And it does ask for a signature officer. So an officer means a current president, a vice president, a treasurer, assistant treasurer, chief accounting officer, or other officer who's authorized to sign as of the date that the return is filed. So if your policy is to have your board treasurer sign the 990, and you had one person that was the board treasurer, let's say during 22, but you have a new board treasurer in 23, the board treasurer in 23 who is in office when the 990 is filed would be the individual that's going to sign the return. So I just want to make sure that we have the return being signed by the proper officer here. And it's really up to the organization who signs it. It can be any officer or an executive director. It really varies organization to organization. As we move on to page 2 of the 990, under part 3, this is where the IRS really wants to know about your organization's activities, its missions, and what it's doing for programming. So on line 1, we're asked to briefly describe the organization's mission. So this is where we're going to report our official mission. This is the mission that was adopted by the board of directors and approved. One thing to keep in mind here is you should be reviewing your mission every so often, just to make sure that's still what you're actually doing. One thing to look for is any mission drift. So mission drift is when an organization, they initially adopt a mission and slowly over time, you start doing something completely different. Be sure that the board does review the mission every so often and that we're reporting the current accurate mission to the IRS here. Line 2 asks if the organization undertook any significant program services or undertook any significant program services that were not listed on the prior 990. So if you added new programs during the year, we need to think about whether they are significantly different from your programs that you currently have in place. So when you initially became a not-for-profit, you applied to the IRS to be tax exempt, and you had to state whether you thought you would be tax exempt for a charitable, an educational, or a scientific purpose. And so based on that initial application, the IRS approved you to be tax exempt because you told them you were going to provide certain programs and services. So now it might be years later and you're changing up those programs. The IRS didn't really approve those initially. So that's why they're asking here if you made any changes during the year. They want to know what those changes are. And then by reporting them to the IRS and them accepting your 990, they're basically accepting those changes. If for some reason you have significant changes in program and you don't report them to the IRS, and for some reason you get a significant amount of revenue from that new program, that revenue could be considered unrelated to the organization's mission. And it could in the future be considered unrelated business income, and you might have to pay UBIT taxes on it. So I just want to make sure that if we have any significant differences that we report that to the IRS here in this area. So if you are, let's say you provide training services, and let's say you provide training services to adults, and you start to expand those services to include high school students. I would say that's probably not significant change in program. So just keep in mind when you're making significant changes that those do need to be reported here. And line 4 asks about program service accomplishments during the year. So this is your opportunity to brag about your organization and what you did during the year. And I think when we look at 990s, this is an area I think a lot of organizations could really expand upon and really could benefit by adding more wording here. Sometimes I'll see under this section, we're just repeating the mission. And yeah, that's what your program is, but maybe you could take some time, really talk more specifically about what your programs are, how those programs are fulfilling your mission. Like, who did you serve? How many kids did you serve? What did you provide? And how did these services help the people that you serve? And again, remember the 990, and I'm going to repeat this a couple of times throughout this presentation, but 990 is open to public inspection, so potential donors can see this. So it's really an opportunity to tell them where their money is going. So maybe add what you did during the year, what you were able to accomplish, and don't feel limited to the few lines that they show here in this section, because any overflow will go to Schedule O, which we'll talk about a little bit later. So again, I'd recommend going through, looking to see what your organization is reporting in this section and maybe tweaking it a little bit, especially if the wording has been the same year over year. Maybe this is the year that you can refresh and update this section. The next section, it asks a number of questions about certain specific transactions or events during the year. And this is only the first 9 questions of the section, but there are a couple pages where it goes through and it asks if you have certain things within your organization. And if you answered yes to any of these questions, then you'll have to complete one of 16 additional schedules. So if you're reviewing your 990, you just want to kind of look through these and make sure that you didn't have any of these during the year. And a good place to start would probably be to look at last year's 990. If you had it last year, you're probably going to have it this year. That's not always the case, but it is a good place to start because, again, we want to make sure that we're filing the proper schedules that go along with the 990. The next section talks about tax compliance. So they want to know if you're filing your 1099s, your W-2s, your payroll reporting, and if these were filed properly. So if you answer them no, or you show a 0, then it may alert the IRS to other potential federal tax compliance matters and obligations. So again, just make sure that you're reporting the proper number of W-2s, 1099s, and that you're filing those and other tax reporting properly throughout the year. Okay. So here's the meat of the 990. These are the governance questions. And these are definitely not on any for-profit tax return that there is. So again, we just start with the number of voting members. So we kind of talked about that a little bit. It's the same question that's on the front page. So how many voting members did you have at the end of the year? Again, this is the number of voting members that are independent. So we want to make sure that we're reporting that properly. And the independent members, that means that they're not being paid by the organization for their services. So for some reason, you have maybe an employee that's a board member, they wouldn't be considered independent. Line 2 asks about family and business relationships within the board of directors. So you probably need to ask your board if they have any type of relationship with other board members or with the CEO or executive director. So we're looking for either family relationships or business relationships. And so maybe you have two board members that own a business together or manage a business together. The key here is that the IRS believes that boards are best when they're independent. And they should be independent not only from the organization, but independent from each other. So really, we want the board to represent our whole community with lots of different backgrounds from different families, different businesses. So we're looking here to have a diverse and independent board. So it is okay to have these relationships on your board, but it is better if they're more independent of each other. And so if you do answer this question, yes, you need to explain the relationship. So for the explanation, we don't really need to get into too much detail here. We can just say that individual A and individual B, that they have a family relationship or they have a business relationship. We don't really need to get into more detail than that here. Next, I want to point out a question that the IRS asks if the organization made any significant changes to its governing documents. So changes in your bylaws, your articles. So again, we need to tell the IRS what you did and then also tell them what you changed within those documents. Next question, number 5, is about fraud. The IRS is basically asking if you became aware of any significant diversion of the organization's assets, which means, did you have any theft during the year? If you look in the instructions of the 990, though, there is a dollar amount here, and I believe it's $10,000. So they only really want to know if there was a large amount of theft, and then you just need to explain what happened. The next question I want to point out is number 8. Did the organization contemporaneously document the meetings held or written actions undertaken during the year by governing board and each committee? So written board minutes, they're really important. And if you're not doing those already, I would highly recommend that you start. So not only for your board, but also for your committees, specifically the governance, executive, and finance committees. Those are the ones that are making decisions that are going to be brought to the board for approval. We want to make sure that you're keeping written minutes and that you're maintaining those in perpetuity. So these minutes, they don't have to be word for word everything that was said at a meeting. But they should be detailed enough to include, at the very least, all the topics that were discussed, along with items that were voted on and approved during that meeting. I've seen some board minutes that were 3 or 4 bullet points long for an hour meeting. In my opinion, that's probably not enough detail. So be sure that you're keeping minutes that are detailed enough to be useful to someone who didn't attend the meeting. Here's the next part of the governance section. It talks about the policies that you have in place. Now, the view of the IRS is that good governance and accountability practices provide safeguards that the organization's assets will be used consistently with its purpose. So they think that if you have these policies in place, you're more likely to be doing other things correctly and be a better run organization overall. Now they ask about these policies. It specifically says at the top, though, that these policies are not required by the Internal Revenue Code. However, we can assume that if they're asking about these, they probably want them to be in place. But just to reiterate, these policies are not required by the IRS, but they are best practices to have them in place. And you can only answer yes on these questions if it was in place during the 990 reporting period. So you can't subsequently vote on these after the reporting period to put them in place. The first one that they ask about here is more of a process. It's asking if you provided a copy of Form 990 to all the members of the governing board before filing the form. So really what you're saying here is, did you provide the 990 to all your board members? So not just your finance committee, not just your executive committee, but all your board members to look at before you filed with the IRS. And the copy that they look at has to include all of the pages and all of the schedules that were reported to the IRS. So we talked about Schedule B not being open to public inspection a little bit earlier for the contributor names and the addresses. But in this case, the board members have to see these contributor names and addresses in Schedule B. So the board members have to see an exact copy of what was filed with the IRS. You don't need to necessarily approve the 990 at a board meeting before you can answer this yes. You can simply email out a copy of the 990 to all your board members. So the key here is that you have to make it available to all board members before filing, and it has to be the exact copy that was filed with the IRS. 11B describes the process and describes how you would do that. And even if you answer no, that you don't make this available to all your board members prior to filing, it's still good to describe the process. So for example, maybe your entire board doesn't review it, but let's say your finance committee reviews your 990, or your CFO and your executive director review it. That's fine, but I think you should note that here so the IRS and the reader can see that even though the entire board doesn't look at it, you still have somebody looking at it before it's filed. Next is the conflict of interest policy. So do you have a written conflict of interest policy? Yes or no? If you don't, I do suggest that you put one in place. If you need a copy, we're happy to provide templates. Just let us know. So it's not just having that policy in place, though. It's taking the next step. It's making sure that the policy is reviewed every year and signed off every year by your board members and your top people. So then also, does the board regularly and consistently monitor and enforce that compliance? So not just, hey, we have a policy, we sign it. That doesn't suffice for this question. And line 13 asks about a written whistleblower policy. Line 14 asks about document retention policy. So these two policies here, the whistleblower and the document retention policy, really should be in place by all nonprofits. Back when Sarbanes-Oxley occurred in the whole Enron thing, I know this is a long time ago now, but there were several policies that for-profit companies were forced to put into place. And there were two policies that they really wanted all not-for-profits to put into place. And these are those two policies, the written whistleblower policy and the written document retention and destruction policy. So again, if you don't have these in place, I'd highly recommend that you put them in place. And if you need templates or a place to start, please let us know. We have templates we can send out if needed. And number 15 is really important as far as compensation. So the IRS is really big on compensation paid to the CEO and executive directors. They want to make sure that they're not being paid too much. And I know here in Fort Wayne, it's probably not a huge issue. However, they still want to know how compensation for your top person is determined. Does anybody review it? Does your board review it? Does your executive committee look at it? Maybe you have an HR committee who's reviewing and improving the amount. They also want to know if you're looking at other comparable organization salaries. So the key here is if you're not already doing this, that we need to start documenting the process for determining the compensation of those key employees. How are we determining the compensation? Are we looking at nonprofits that are similar in size and do similar activities? This should also be approved. So make sure you're documenting that approval as well as the process for determining the final salary. So again, this page here, both sections A and B of the governance section, really, really important part of the 990. Then we go to the final section, it's part C, which talks about public disclosure. So we talked a little bit about making your 990 available for public inspection. Well, not-for-profits are required to make Form 1023 or 1024 available for inspection to those who, and those are those initial applications to the IRS when you became tax exempt. But technically, you're supposed to have that available along with your 990. So those forms really need to be available for public inspection if someone asks for them. And then it goes on to ask how you make those available. Is that going to be your own website, another's website, upon request, or other? One thing to note here is that another's website does not count if you're referring to the IRS or the GuideStar website. If it's just those websites, you can't check this box. Another's website would be something, maybe a national organization. So maybe you're a local affiliate, and then for some reason, the national organization puts all of the affiliate 990s on their website. Then you could answer yes here. But if you're just referring to GuideStar or the IRS website, then you would check no. Question 19 asks if you make other governing documents available. So this would be your bylaws, your articles, your conflict of interest policy, your financial statements. Are those available to the public? This isn't required, so you don't have to do this. However, I know a lot of organizations do add these to their website for additional transparency. And the IRS believes that the more transparent an organization is, they're going to be likely better governed and better operating. So it does ask if you have these documents available, but again, you're not required to do that. Either way, you would just answer yes or no, and then if you answer yes, you need to add how you make these available. Okay, the next section of the Core 990 talks about your board members. So you may need to complete Schedule J here related to compensation and benefits, depending on how you answer some of these questions in this section. And it's very important that you report the names in this section correctly, because these are going to be the individuals that are ultimately responsible, not only for the strategic direction, but the oversight of your organization. But also, if something were to happen to your organization, these are the people that are responsible during that time. And if you look at someone else's 990, maybe worth researching more about these individuals. So if you pull up someone else's 990 and you see some names here, you might want to go to their website. A lot of organizations will have their board members listed on their website. We'll tell a little bit more about them. So you can see who's on their boards, and diversity as far as profession or gender or ethnicity. So you can kind of get a little bit better idea as to who's actually on their board. So first, we need to list the name and title of anyone that served on the board at any time during the year here. They may have turned off early or they may have left early, but if they serve at any time during the year, their name needs to be listed here. And then their title. So if they were a chair, a vice chair, a secretary, or just a director, and then the average number of hours per week that they commit to the organization. And then what position do they hold? So are they an individual board member, individual director, trustee, or officer, or a key employee? So normal board members, if you're just a board member, you're going to check individual trustee or director here. If you're a secretary, a treasurer, a vice chair, a chair, you're going to have the individual trustee box and officer checked because you've been elected to an office position. Now the key employee and the highest compensated employee, those actually have a dollar amount attached to them. I believe it's $100,000. So just because you may have somebody like, for example, your CEO or your executive director listed here, they may be the highest compensated employee, but that box might not be checked if you're not paid over the set dollar amount the IRS is asking for. Same with the key employee. Yes, your CEO or your executive director may be a key employee, but they probably aren't going to have this box checked unless they receive over the certain dollar compensation. Normally, they would have the officer box checked because they have been hired to be in that position to run the daily operations of the organization. So it's important also to make sure that you have those boxes checked correctly here. And then we get into compensation. So they want to know how much is reported on the individual's W-2 or 1099. And so for anybody listed here, your CEO, your CFO, board members, if anybody received a W-2 or a 1099 from the organization during the year, you need to list that dollar amount here. We also need to list the dollar amount if it's been received from a related organization. So, for example, some organizations, they have a foundation that supports the charitable organization. And so the CEO might get paid partially from a separate foundation and partly from a charitable organization that runs the operations. So you would need to put both amounts here. And then finally, other compensation. So this would be basically any other benefits that the organization pays on behalf of that individual during the year. So that would be like health insurance, retirement, contributions to an HSA, and any kind of life insurance. Those types of benefits need to be reported here, and the amount that's reported here should be on the cash basis for the calendar year. Next, we get into the statement of revenue. So as you can see, all the stuff we talked about so far really has nothing to do with your numbers or your financials. So they want to know about the organization's mission, its program, its governance, and its policies. Now we finally get to revenue. So this is the top part of the statement of revenue. One thing to remember here is that the revenue on the first line of the financial statements may not match revenue that's on Form 990. So in-kind services, in-kind use of facilities, they're not going to be reported on Form 990. So there may be just some differences if you're trying to tie out your revenue on your financial statements, even your audited financial statements with your 990. There will be some variances when you're looking at both of those. And when you're reviewing a 990 for other organizations or your own, it's really important for an organization to have diverse sources of revenue. As you can see here, the revenue is broken up by type. We have contributions at the top. We have program service revenue, we have investment income, and then down below, there's some other type of income. So we want to make sure that it's best that organizations, they get their money from all different kinds of sources. Because if for some reason your organization suddenly lost that source of revenue, what would you do if you relied too heavily on one source and that source suddenly went away? That could seriously impact an organization's activity. So we want to make sure that that doesn't happen. Next, we talk about our expenses. So again, your expenses that are on your financial statements, even your audited financial statements, may not tie directly to these statements because of those in-kind services that we talked about before. And then also realized gains and losses aren't reported the same way on the financial statements as they are here. So just know that there could be variances when you're looking at expenses here. Again, this is only the top part of the statement, but across the top, we have our total expenses. And then the amount in column A, it needs to be allocated between columns B, C, and D. So not-for-profits are required to allocate your expenses between these three functions: program, management in general, and fundraising. And then down to the left, we can see the different types of expenses, whether it be payroll taxes, salaries, supplies, and so on. So when you're looking at your 990 or another organization's 990, you want to see how the expenses are allocated between these three functions. Obviously, it's important that we want most of our expenses to go to program, because that means the resources we're pulling in are being used directly to support our mission. However, we can't have 100% go to program, or it's really unlikely that you're going to have 100% go to program, because we're running a business. We are going to have general expenses, operating expenses. We're going to have overhead. We have to file a business entity report. We might have to have an audit. We're going to have bank fees. Those general expenses that occur no matter what kind of programming we're doing. And then also, if you have contributions and grants, we really need to have fundraising expenses. Fundraising expenses are the expenses that are incurred to get people to try to give to your organization. So if you're looking at 990 and there are contributions or grants reported, the IRS is going to expect to see some kind of fundraising expenses. Now, in some instances, that might not be the case if you rely heavily on volunteers to do that work, but in general, there should be some fundraising expenses. So when you're looking at a 990, you want to see how these expenses are allocated. Have they been allocated in a reasonable manner? And what is the percentage of program expenses? So most funder benchmarks, and we've talked about this before, want to see a 65 or 75% of your total expenses being allocated to program. Again, that's just kind of a general percentage, and yours could vary. Younger organizations that haven't been around as much are probably going to have more management in general, more fundraising. And if you're going through, let's say, a huge capital campaign, you're probably going to have more fundraising expenses. So the bottom line is, when you're looking at a 990 or someone else's 990, look at how they're allocating these expenses. Is it in a reasonable manner, and how much are they putting to program versus management in general and fundraising? Next, we're going to talk about the balance sheet. So just like your financial statements, we have a balance sheet. So on the balance sheet, we start with assets. Again, this is only the first part of the page. We also have liabilities and net assets when you're looking at the balance sheet. Assets are what you own. So this could be a key sign of organizational strength. However, it really depends on whether they're liquid or not. So if you have a lot of assets, like a lot of fixed assets maybe, but a small amount of cash, that's probably not good because you can't access those fixed assets and turn them into cash quite as quickly as money in your bank account. So this is a great place to see how an organization is doing financially. The next section here are your liabilities. And liabilities aren't necessarily a problem if they're offset by cash. A lot of organizations will have accounts payable, notes payable, debt, that type of thing. It's fine that you take out these type of loans because you may have to have those to fund and run your organization. You just want to be aware of how much those liabilities are, if they're growing, and if you have enough cash, or if you will have enough cash in the future to pay those off. Again, when you're looking at the balance sheet, you see your beginning balances, you have your ending balances, so you can compare year over year to see if those balances, if your balance in cash is growing or decreasing. Are your receivables going up and down? Are your payables going up and down? Balance sheet can be a great place to start analyzing an organization on their 990. The next section is a reconciliation of net assets. I just want to note here that this is where your unrealized gains and losses are going to go. They're not going to go on the other statements. So in part 12, it talks about some basic financial information as far as what method you're going to use to prepare your 990. Is it the cash basis? Is it the accrual basis? Or is it another method like maybe modified cash? Whatever method you used for your audit, your review, or your internal financial statements is usually going to be the same method that you use here to prepare your 990. The IRS also asks if your organization has received a compilation or a review by an independent accountant. So if you do your own internal compilation or review, you would answer this question no. Also, it asks if an audit was done by an independent accountant. So if you have an audit or review or comp done, make sure you answer this question yes. Also, it wants to know if you had a committee that assumes responsibility for oversight. So do you have a finance or an audit committee that looks at that, or do you have a board that looks and approves the audit? And then finally, it asks, are you required to have a single audit? So those organizations that spend over $750,000 of government funds during the year, they're required to have this type of audit done. So just make sure that if you have that audit done, that you're checking this yes, that you did have it and it was completed. So that was a run through of and the highlights on the core Form 990. Next, I'm going to talk about some of the more common supplemental schedules, starting with Schedule A, which is most organizations are going to need to complete. The first page here asks why you're a public charity. So as a not-for-profit, you apply for tax exemption. You either considered a public charity or a private foundation. You're a public charity if you get basically all of your money from different sources of income. And you'll be considered a private foundation if you get your money from one source or a very limited amount of sources. There are differences in the forms that you're going to file for reporting depending on how you're classified. As I said earlier, private foundations have to file a 990 PF. Private foundations have to pay excise tax. They have to give out a certain percentage of their assets each year. So there is a significant difference between a public charity and a private foundation. So what Schedule A does, basically goes through a test each year and tries to determine whether your organization is still a public charity. The first page here asks why you're considered a public charity, and the most common reasons are going to be a number 7 or 10. And that's where you get your money from. So do you get a substantial part from a general public, from the government, or do you get more than 33 1/3% from contributions, membership fees, etc.? So this does not change what was noted in your IRS determination letter. So whatever was in that determination letter should match this here. And you can look that up on the IRS website under the tax exempt organization search if you want to make sure that this is being done properly. So here's the calculation if you checked box 7. You would need to complete this part, and it's a complicated test done each year to look to see where you're getting your money from. Are you getting it from a whole bunch of different sources, or are you getting it from one source? And you want to look here, and you want to make sure that this percentage on line 14 and 15 are more than 33.33%. That's the magic number here. So if it's less than 33.33%, you've not met the public charity support test, and therefore you will be considered a private foundation. So the thing to look at on yours or another person's 990, if you're reviewing someone else's, is what is this percentage? Is it higher than 33.33%? And when you're looking at comparing line 15 to 14, so that would be the prior year to the current year percentage, is that decreasing? So if you have a consistent decrease in this percentage, that might raise concern, and you might want to start considering where you're getting your revenue from. And here's the support test if you check box 10 on the first page of Schedule A. Again, depending on what line you checked on the first page, there's two different kind of tests that need to be done. And again, it's really the same thing. You're looking to see if these percentages are more than 33.33%. If they're not, that could be a concern. And also if they're significantly decreasing year over year and getting close to that 33.33%, that could be a red flag that you might want to investigate. Okay, so the next schedule that most organizations are going to need to complete is Schedule B. This basically shows all of your donations over $5,000 or 2% of your total revenue. On this schedule, we're going to list the donor's name, your address, the dollar amount. And again, this schedule is not open for public inspection as far as the names and addresses. One thing to note here, don't put anonymous if you can avoid it as a donor name. The IRS really doesn't like to see anonymous written here. They think that if your organization's received a donation from someone, then that organization should be able to determine the name and the address of the donor who gave them funds. And then we have Schedule O. That is the form that most organizations will need to file. And basically it looks like a blank sheet. Schedule O is really an opportunity to provide additional information and answers and any additional questions and clarify any additional items that were in the core Form 990 that you want to make the reader and IRS know more about. So again, don't limit yourself on the program service accomplishments or your mission statement, because any of the overflow, like we talked about before, will just go on to this form here. So as you can see, a 990 is not a tax return like a for-profit has to file. Yes, there's some financial information that's reported, but really it's kind of divided into three sections. You have your governance, your tax compliance, and your financial management. It asks a lot about your mission, your policies, and how governing decisions are made, but then it also goes into making sure that you file the proper tax returns and also asks questions about financial management. We're not only reporting revenues and expenses in your balance sheet items here, but we're going one step further and we're reporting them by function. So as you can see, a 990 provides a lot of information about an organization. So two things to remember, not only when you're filing and preparing your 990, but if you're reviewing another organization's 990, what is that 990 telling people? Remember, it's an opportunity. Again, this might be the only communication that you have with some people. So making sure that it's done well. Also, the second thing is if you want to find out more about another organization, you can easily go online to IRS website, GuideStar, Candid, pull up someone else's 990 and look to see what's going on in their organization. So it does provide a wealth of information. And that's why we always stress to organizations that you really want to make sure that your 990 is completed properly. Yes, you're not calculating a tax here, but it is open for public inspection and provides a wealth of information. So you really want to make sure that all the questions are answered and that they're answered correctly for your organization's activities. All right, so I hope everyone learned a little bit today, learned more about how the 990 works. So the goal here was to give you enough information to be able to properly review a 990 from a really high level or a board level. And that's all I have for you guys today. I'll now turn it back over to Phil. He's going to talk a little bit more about some of our upcoming webinars.
Thanks, Dyson. Appreciate all the really good information you covered today, and I hope everyone got something useful out of all those great tips and information that Tyson covered here in the last 50 minutes or so. Just another reminder that the slides from today's presentation will be emailed out to all the participants. Also, again, it'll be available on our website, DWD's website, underneath the nonprofit education page. And as Tyson mentioned, we have some webinars coming up in the next few months. Next month, August, we'll be covering internal controls for your nonprofit. September, we'll be discussing cost and expense allocations for nonprofits. That was touched on a little bit in the Form 990 and some of the questions in the chat, but that's also going to be a good one to attend and find out how to learn more about allocating expenses. And in October, we'll talk specifically on issues facing churches and religious-based organizations. So again, thank you for attending today, and hopefully we will see you in the next coming few months. And take care and have a good rest of your day.